So the number one question that I get every single time I do one of these videos, when I'm talking about loan modification and I'm talking about the things that happen after forbearance, is what happens to my equity in my home? A lot of people are very confused about this situation because they're not sure what really happens at the end of a forbearance period and how that agreement that they make with the bank, how that affects their equity and what their house is worth when they go to sell it in the future. I'm gonna talk about all of that, and I'm gonna explain to you with exact numbers what happens to your equity when you take a forbearance and you come out. So it's March of 2020, and you decided at that point that you could not pay your mortgage for various reasons, specifically because COVID affected your work, you were unable to make your mortgage payments, and you decided to take the very easy forbearance that was handed to you with one phone call from your bank. Now, 18 months later, almost 2 years later, we are coming to the end of forbearance. And a lot of people are sitting there and they're not really sure what's gonna happen when the forbearance ends and what they got themselves into. We're gonna be talking about post-forbearance agreements. Now, there's basically two things that you need to understand. You can either enter in a loan modification, or they can take the amount that you owe and put it at the end of the mortgage, either in a deferral or what's called a partial claim. All of these things are the way that you come out of a forbearance now in the end of 2021. Now, the question is, when you came out of forbearance, you owed a certain amount of money and your house was valued at a certain amount. The question is, what happens to your equity in this situation? Now, we're going to look at an example of the Taylor family. The Taylor family has a beautiful 3-bedroom home that's worth about $300,000. In March of 2020, when they took their forbearance, they owed $210,000. And their payment was $2,200 a month. Now, the question is, now that we are coming to the end of their 18-month forbearance, what will happen to the equity? What do you think will happen to the equity? I'm not sure you actually know because very few people know. Now, here's the thing. These folks were in forbearance for 18 months. 18 months times $2,200 is $39,600. Where is this $39,600? Where is it? Do they owe it now? Do they owe it later? Or do they not owe it? We don't know. So we're going to talk about the two possible scenarios and the two things people had in their minds when they took the forbearance. Scenario number one, you still owe the same amount of money that you owed when you took the forbearance. You owe $210,000, and the bank simply paused your payments and extended your mortgage for 18 months. So in theory, you don't owe the $39,600. Now, a lot of people, when they took these forbearances, this is what they expected. Scenario number one. Similar to when the cars were doing this at the same time, and I'll be honest, I did this with my car payment. They basically paused my car payment for 3 months. No harm, no foul. All that happened was for 3 months I didn't pay, and then at the end of the 3 months I came out and kept paying. A lot of people think this is what happens when they took the forbearance. Now, the second scenario that we're going to look at is a scenario that is possible also, which is basically the $39,600 that is owed in back payments is added to the mortgage, either directly through a loan modification where it's basically rolled into a new mortgage, or it's added to the end as a partial claim or a deferral, which means that it's essentially a second mortgage that sits on your mortgage. So when you sell the house, you have to pay it. In this scenario, the folks now owe $249,600 versus $210,000 that they owed when they took the forbearance in March of 2020. Which scenario do you think is the one that is most likely to play out when you finish your forbearance. Now, I'm going to explain something to you. The word forbearance doesn't mean that you never pay. It basically means it's a delay in payment. So what you don't pay today, you will pay in the future. How does that work? And what is it that actually happens? Now, I'm going to tell you that the reality is that the scenario number 2 is the reality for most folks, for pretty much everybody. The $39,600 is added to the unpaid principal balance, so now you owe a lot more than you owed when you initially took the forbearance in March of 2020. The question is that legal? Is that legal for the bank to basically take what you owe, put it into a new mortgage or a deferral, which means a second mortgage at the end, or a partial claim, which is similar, and then all of a sudden, instead of owing the $210,000, you owe $39,600 or more? And the answer to this question is yes. The bank is allowed to do this. This is how mortgages work. When you did not pay the money during the forbearance time, that was not a pause. That was not something, well, I'm not going to ever pay this. What happened in that situation is there was a delay in the amounts of money that you paid, but the money that you owed, you continued to owe it. You basically pay that amount of money, in this scenario, $39,600 at the end, or it's built into a new mortgage through a loan modification. A lot of people are surprised when they came out of forbearance that all of a sudden they owe a whole hell of a lot more than they thought they owed, and their equity, which they had a nice equity cushion. In this scenario, these folks had a $90,000 equity cushion in March of 2020. Now that cushion's been cut down by $36,600. $39,600. So what are we going to do in this situation? Unfortunately, there's not much you can do. This is what you signed up for. I know a lot of people did not realize that when they took the forbearance, but it is the reality of what we're dealing with. So the best thing you can do is make sure that you make your mortgage payment for at least 12 months in your new loan modification, so that maybe you can refinance and get even a lower payment or a shorter term and try to recapture some of that equity that was eaten up during your forbearance.